I'm going to be giving you guys a snippet of my weekly team call that I do with my mentees. And then I'm going to show you guys how I actually got involved in a trade using exactly what I'm saying on the team call. All right, guys, so this is my weekly team call. I'm talking about Euro USD. I'm going to hit play. All you guys have to do is just take it in. So I'm expecting Euro USD next goal to be running out these lows. You have to look at, so where's all the inefficiencies? What could price potentially use to drop again? Price is not going to come back up here, like I said last week. Inefficiency here. Not interested in that one. No inefficiency along the way. No inefficiency along the way. So I would just be expecting prices just to run out these lows. Just run it out and that's it. And nothing else. The only thing I can see price using is the imbalance. The imbalance there. If it trades back up into the imbalance, that's going to be a better position. So you just heard a little snippet of one of the things I shared on my team call regarding Euro USD. It was just me telling my mentees where I'm expecting to catch an entry from and where I'm looking to take it to. So now it brings us to this week. I done shared the team call on Friday, or was it Saturday? This is that daily imbalance I was using over here with my daily imbalance. It was this one right here. I'm going to go ahead and mark it up and I'm going to highlight it in gray, just like the video. So now I'm on a 50-minute time frame. You can see this is a new week. There was a few things I mentioned on the call. There was nothing we could use for an entry to turn price around apart from the daily imbalance here. So I want you guys to fully understand this. You guys know I had a weekly low here, that weekly low right here marked up. This is my weekly low here that I wanted to get taken out. Now, let me just zoom into the weekly. So I'm in a weekly time frame, and this is our weekly low that I wanted to get taken out. It was also very, very close to this low here too. So it was technically like relative equal lows too, but just so you guys know, it was my weekly low that I wanted to get taken out. Now, if I go back to the 50-minute time frame, the weekly low was all the way down here. So now we know it's all the way beneath us. All of this then should be easy money to be running out once price gets moving. So there was a few things that you could have done to take TP at. For example, there's this low here. I was very interested in this low right here. So this was just the previous day's low. And you don't have to get really overzealous. You don't need to be holding everything to this point. It all just depends on whether you have the availability to be looking at the charts at the time. Me personally, I didn't have that availability. I was too busy getting stuff done to the car. So I wouldn't be able to manage the trade beyond this. And then there was also the last week's low. And just beneath the previous week's low, we had the weekly low down here, coming in at roughly 1.0834. Just because I wanted to see the weekly low taken out, it didn't mean that I had to hold the pair all the way down to there. So I can take TP along the way. That's my mindset. I don't always have to hold it down there. If I was going to hold it down there, I would normally take partials and then let the rest of that trade run. I wanted to see price trade into the imbalance. We had equal highs here that I wanted to see price trade through. So Monday we came close. We didn't run it out. And that was technically the giveaway that price wanted to make one more move higher to run out that liquidity above this high. You guys know my 7-step Forex trading strategy. I keep bringing it up because I want you guys to fully grasp it. You guys need to go over that video multiple times until when you fully understand each 7 steps. I always like liquidity taken out first. Liquidity taken out first before the drop, because I always like the candlestick to produce the wicks first, then we're in either from the wicks or the bodies and we run it to the lowest point or to TP. And let's just use Monday as an example. Even though Monday didn't take out this high here, it took out a Friday high. I believe this is Friday's high. When price began to drop, there was no follow through. We didn't get down to our level here, which is what I wanted. And so let's just say Monday, it never went to plan. So when it runs out liquidity again and you are bearish like I was, I'm going to do the exact same thing. Mondays normally are days that I like to set up the week, but I still trade on some Mondays, but I like my Mondays to set up the week. But anyway, Tuesday, we run out the previous day's highs. We run out this high too, Thursday's highs. And now I'm looking to get active. And just so you guys know, I'm in for this high here, and I'm going to explain that entry for you guys. So we have a smaller up close candle here. That price drops. There's inefficiency here. You guys know what an imbalance is, or a fair value gap. I'm in from here. And you can see that on my Instagram that I was in from that trade. So now the one I want to share with you guys. So now we've got our entry, our first entry. There's going to be sometimes I look to catch a second entry, maybe a third entry as well. So basically just add into the position. This is what I like to see now. I'm going to go to the 5-minute time frame because it's going to move a lot quicker. So on a 5-minute time frame, in fact, you know what I'm going to do? On a 5-minute time frame, let's go ahead and hit play. So basically what I'm looking at now then is you have to always remember, if you're not in from the very highs, your next opportunity is going to come from after price takes out this low. This is key as well because, look, people are going to be thinking that this is an uptrend. but then it would only be an uptrend on a lower time frame until a specific point, because the daily time frame is what we're looking at. We're looking at price turning around here. So this is why, even though prices come back into this down close candle here, this is why I wouldn't be expecting this to push up and make a new high, because we've already traded into my point of interest where I believe price is going to turn around. So that means then, now we're in my point of interest, if we then go forth to take out a down close candle, it means price is fully reversing, price is fully dropping. You should be of the bearish mindset, full stop. So let's hit play. You can see here we fully take out this low now, this down close candle here. So there's a few things now that we need to keep an eye on for an entry, for the next entry. And so this is either for a additional position, or this is for a position, let's just say you're not in the trade, this is what you'll be looking at. So first off, this whole move up higher, now we've traded past it beneath the low. This is actually an up close candle on a higher time frame than the 5-minute time frame. Just like there was an up close candle on here, you would use that to sell off. That means if price came up to the lowest point, when price comes back up into it, you can be looking for an opportunity to sell from that position. And I'm going to leave this for you to look at what time frame it is that you're going to see this as a clear up close candle. It could be the 30-minute, it could be the 1 hour time frame, but you're going to see it as an up close candle, because I look at the whole move. It's the whole move that took out this high. And then we traded back beneath the low. Now you can be looking to enter thereabouts the lowest point of this up close candle. And if that flops me, I'm going to look about 50%. So now let's refine it a little bit more. We're looking at this whole upward move being an up close candle. Along the way, thereabouts the lowest point of the up close candle, if we look down here, what do we see? We see some inefficiency here. So let's go ahead and mark up that inefficiency. So now then, that means when price comes up into this imbalance, I can then use this imbalance as an entry point to take price lower. And so I can either use the lowest point, 50% of the highest point. So my trade is going to look something along the lines like this. So roughly about, we can look at price tapping into the lowest point, 50% of the highest point. So you can play it safe and just pick the lowest point. So let's just put the lowest point in here for now anyway. And I had my stop loss nearabouts this kind of 6-week high. It was a 6 point something pick stop loss. My TP level here, let's go back up the time frame. Let's go to the 50-minute time frame. My TP level was going to be this low here. Alright guys, so we're going to keep it on the 5-minute time frame. I'm going to go ahead and hit the play button to show you guys how this played out for an entry. So you can see here, this is where we get tagged into the trade. Let's go ahead and refresh this. There we go. I put my stop loss in a very safe position, which is up here. And now I'm going to hit play again. So you can see here, look, we overshoot that imbalance. So just always make sure that if you're going to be jumping in from here, but you're also seeing an up close candle in here, just put your stop loss in the right place. This is just one of the things that traders just do. They're always trying to catch a really tight stop loss, but it's not every single time you can catch a tight stop loss. If everything was evenly traded here, then maybe. Other than that, guys, keep your stop loss in the right place. And then price starts to shoot for the downside. Let's go ahead and hit play. There we go. Price is shooting to the downside. Look at that, providing little to no retracements whatsoever. You guys know where that TP is. And let's just pause it right there. We went sideways. I told you guys, price doesn't always need to retrace and then drop. It can also go sideways and then drop. And this is exactly what happened. It went sideways, dropped, and went straight to our TP level for a nice 1 to 6 hour trade. Taking out the previous day's low. Another reason I took it here was also because there was a down close candle to the left. And you guys know price could respond off of a down close candle. And so I'm going to trade it well, trade it to the down close candle, and then either let the runners run if I had time to watch it, or I'm going to close the position off and I'm going to be done for the day. I ain't going to be greedy. I'm Gucci. Don't forget, like I said in the team call, I'm expecting price to run out the weekly low. So now let's hit play. Let's show you guys some more. I'm going to go up the time frame for this one. Now this trade is done, basically. I'm going to go ahead and hit play. Look, the price goes for it, runs out this down close candle like it's not even there. And beneath the down close candle, like I said, beneath the down close candle is what? That weekly low. Price trades right beyond it and then starts mucking around here. So from the team call, I spoke about price turning around from this imbalance here. And I told you guys exactly where I wanted it to go, which was beneath this low. And as you guys can see, price has done it to the T. This was just one of the trades. I was in from the highs and I was in a few times along this move. On Instagram, my trades are running to these levels. That's the beauty of having more than one trade. Obviously, trading it well, not just, jumping in randomly. The beauty of multiple entries is that you can treat each one separately. So this one could be one that holds to the end. This one could be a shorter version, and we can have another one along the way for a scalp. There's multiple ways to play the multiple entries. So now what I'm going to do, guys, is I'm going to go forth and show you guys my executions. I'm going to give you guys a breakdown of what I expect Euro USD to do going forward. Let's go ahead and put on my executions. I'm in the trade from this level here. Let's just zoom all the way in. I'm in the trade here, exactly on point here. Let's refresh this. There we go. Let's zoom all the way in, all the way in. So you guys can see here, my executions are on. I'm in from when price taps into the imbalance. I'm out here, right at these lows. The moment price trades into that down close candle and just at the lowest point of the previous day's low. So right now I'm looking at tomorrow, Wednesday. I would like to see price trade back beneath this low again. And this time I would want to see like a fuller body candlestick. Put it that way, a fuller body candlestick. That would be more ideal. Or that would warrant then for lower prices on Euro USD. And then I'll be looking at the next point of liquidity to be this one right here. I'm going to take it one step at a time. That's going to be my next point of interest for where I believe Euro USD is going to go.